Good afternoon, everyone. This is about takeover stuff, not about bear flags like you see here. Just to let you know, a number of people said that they've been reviewing my class on the art of short selling. And I'm telling you, you need to have both sides of the all the tools available to a trader. And that means there's a time and a place to play things on the short side out. The other is just to let you know, if you see Mirza, if you see anybody advertising another site on the YouTube restream thing, please do accordingly of what you think you should do. So getting back to it though, this is all about takeovers. Now, why are we talking about takeovers? We're talking about because if we go into a more lax regulatory environment, you might see a lot more takeovers. Already a lot of news about takeover, a lot of lawyers and stuff that have already been discussing deals. So the key in here is two things. Well, number one, deals. Number two, unusual option activity, because in lax regulation, you're only going to have the SEC give you a slap on the wrist. So just keep that in mind in there. So the way I'm looking at it in here is what would get taken over? Well, one thing is Wall Street Journal had an article today about the PE is between 23 and 24 in the S&P. But if you took out the high, crazy stocks, like them all, it would only be 17 or 18. Well, what's that mean to me? Well, it means probably the expensive stocks will use their stock, their highly expensive stock, to buy out cheaper companies. So the first thing is, what areas will get taken over? Well, this is how I look at it. I would go into screener. So we know tech, and we're thinking that like Google's going to buy a tech stock. They're not going to go and buy Procter and Gamble or something. That's number one, tech. Number two, you can't go really on PE because they might have you want a growth company. Just so you know, in my 40 years of trading takeover companies, there's two types. One is if something's way under book value, but that's less reliable. The better ones is stocks that are growth. Yeah, because companies want growth. So one of the ways we do it in here is what we'll do is we'll look at technology. Then what we'll do is you got to look at things that aren't an unreasonable market cap. I found that most takeovers are under 50 billion. So it's a little rough. They don't have a lot of under 50 billion here. They have like under 200 billion. Well, that stinks. Then they have under 10 billion. That stinks. So usually what I do is I just go under 2 billion, but then I just sort it by market cap. That's your first step. Sort it by market cap. So you see to take out the Qualcomms and the Intuits and the Lam Research. So that's one way to do it. You build a watch list of the tech stocks that the market cap is at like 50 billion and under. So that's the first thing you want to do. That's one way to do it. Then what you do through that is you look for unusual option activity. But let's just build this. So I want to build you a watch list. This is sort of a funky way to do it, but it works. So I'll show you. You're going to take 3. So we're going to take all those in that sweet spot. And then what you're going to do is left click and highlight them all. You're going to highlight the numbers, the price, the change, and press copy. Then what you're going to do is build a watch list. So we're going to take a watch list and go takeovers, tech arena, there. Now what you're going to do is import. So that thing you just left click, you now paste those symbols. It's going to have preset order. It's going to have everything. There you go. So you'll see you have like an eye, and you have things that have NA, you take those out. There. And you might have an A. You got to take that out if you see them. Now what you do is you go back to it and you go into here. You already did that one. Now you go to the next one. So you go into here and you take all of those. You right click, copy. Then you go into here and you go left click, import, but instead of replace current symbols, you want to add to them. There, and that's how I'm building a watch list. So, and it works pretty well. Like I said, you take off the ones that say NA. There. So we'll just take these. I mean, it's going to be a lot more than that. So, like I said, it's a lot of pages. But you don't want the $2 stocks. You want all these. All the mid cap. To me, that's mid cap. So we can actually take these because this has a lot of the software. I like a lot of software. Copy. Then you go back into this. Import. Left click. Paste symbols. Nah, I pressed it wrong because I didn't replace. So I'm going to have to revisit. But we'll just take this page. We'll take this page because I want to show you what I'm watching. So there are two ways I watch it. One way is I can go into barchart.com and we look a lot at unusual option activity. We look at the calls. We then look at the implied volatility rank because that shows you what's gone up in volatility. So that's one way to do it. Now, this is what all these people on CNBC and all this do wrong. If something has a lot of call volume and it's up $1.70, 27%, it's going to have a lot of volume. You're looking for the things that haven't had volume yet. So that's how we find them. Now, keep in mind, I don't do it as much on a Monday. 80% of takeovers, at least 80, is over the weekend. So I'll do this a lot on Thursday and Friday. But the whole idea in that is that if they start buying calls, well, you see this stock's down 16, they're going to be buying a lot of puts. So I'm just telling you, this is one way to do it. You go into barchart.com and you just sort of build a list. That's one way. The other way to do it in here, I'll show you, is after I built this list, I go in, I look at call sizzle. That's the amount of calls relative to normal for the day. A lot of times you get some funky stuff. As you see, the call sizzle of this one is 22 times normal on the upper right. VeriSign. Well, it's up 9. It should have more call volume. Take that one off. So you could take grab. So, but the problem is you still got to look at each one and look at the options. But you could see unusual that way. That's one way. The other way is to scan. And you go into scan. And you go to unusual call sizzle. Yeah, that's another way to do it. And all you're doing in here is I'm taking all stocks, let's say over 5 or over 6. Let's just be snotty. I want them to have some open interest. I found that most takeovers are when they're already over their 50 moving average. And I want the call sizzle, let's say over 3. Now, this is all stocks, not just tech. This is 3 times call sizzle. It's only 127. It's not that many. So like I said, the ones that are up the most are going to have the most call sizzle. Like Hershey's. Yeah, that was on my rumored takeover list. Wow. But I'm just telling you, not the ones that are up 10. You want the ones that are doing nothing and have high call sizzle. I've just seen, that's how I've seen it. What happens is A stock goes down, but there's a persistent buying of calls. That's what you're looking for. So that's one way. Unusual call sizzle. So now you could always change this to industry. And guess what? You make it all, let's say, info technology. You're going to have a lot less stocks. There, 17. So you got the MongoDB, Asana, Jinko Solar. You're going to have those. Now, AppLovin, we were talking about that. Isn't AppLovin the name of the guy from Superbad? No, that was MacLovin. Sorry. But AppLovin has been a crazy stock. Yeah, it's down 50. It's going to have a lot more, it's going to have a lot of options because all of a sudden the expected move widens. But to look in here, are there any that are a little funky? Well, number one, if you see a lot of put sizzle and call sizzle, that doesn't mean that it couldn't be a rumor takeover. And you might ask why. So a lot of times somebody might buy a lot of stock and they buy puts against it. So that's like buying a call. You buy stock, you buy puts, it's like buying a call. But I'm looking at something like, let's take a for instance here. Let's take Infosys, INFY. So we're going to go into here and look at the chart. Well, that's already had a heck of a move, but still, and it has earnings coming out, but that's in January. So let's look at it. Is it really trading a lot of options? Remember, call sizzle is, let's say, 5 times its normal, might never trade options. Yeah, that's pretty crappy. What you're looking for is a stock not doing anything, and all of a sudden there are 5,000 calls. Now, you'd like the implied volatility to go up also. So one way to do that is add this thing called implied volatility rank. I'll show you. That shows the increase in volatility theoretically. And it shows the IV percentile like between 60 and 99. Everything else we talked about. And so you go to it. Now, I want to show you what we're talking about. So the theory is, if a stock is moving, if you see the calls going up and you see the implied volatility going up and the stock isn't going up, well, let's put it this way. If there's a big call buyer, then the call implied volatility is going to go up because the market makers are going to widen the market. If all things being equal. So you see implied volatility is up in Hershey's. Well, it should be. MongoDB and Real should be. So now the big thing to do, were there any takeovers over the weekend? Well, let's see. So one way to do it, I don't know if everybody knows, you can go to news over here. See the news? See the live news? Down here, live news. I'm going to detach it for you. I want to show you something pretty cool. I'm hoping it works, and I hope I'm not blowing up the computer because I have a lot of bandwidth I'm using. So I'll show you. No, it's not going to let me, as you see. See the arrow moving around, so it's getting too unstable. So let me take this off. Give me a second. It's going to say that performance thing detected. So just bear with me while I move this. I'm going to take this off. I have up a lot of different windows. So there, let me get rid of this. Like I said, the arrow messes up, so please bear with me. You're going to see how slow it is. That's how you know it's unstable. So I just have to get rid of that. So then I can show you on the different screen. So since the integration of Thinkorswim and Schwab, you've gotten a lot of this. There, and now it should get faster. Yeah. All right. So now we're back to this. When you go to news, you can take off the little link and you can actually put in this a group, supposedly. There you go. Top news keywords. Look at that. And you take out Infosys. There. And as you see, there are a lot of takeover news. Now, the reason I'm showing you this, why would you ask why I'm showing this? So then you can go backwards and see if there's any unusual option activity. Like I said, the less regulation, the more insider trading there's going to be. I just want to make that clear. They don't show a lot in here. Here, Mondelez considering takeover of Hershey. Do you see that? So the bigger question you want to know, see that? Was there unusual option activity prior to that news at 1024? So let's go and look. The best way to do it is to take Hershey's. And now what you want to do in here is you'll take daily and you'll take hourly. And what you'll do is put in implied volatility and see if it got funky like last week, as if somebody knew. Remember, there are a lot of layers of people that will know. So you're going to have lawyers, you're going to have, stenographers, you're going to have all chains of command that know about it. And keep in mind, in my 44 years of doing it, it's all kinds of administrations that if you get lax oversight, you get more takeovers. So that's just, it's been a cycle for a long time. So all we're going to do is take implied volatility or increased. I don't know which one works. We'll put them both in. And then what we're going to do is we're going to take this. You don't want blue. It's hard to see. We'll make it that. There. And we're going to see if Hershey's has changed. Well, there you go. Did it start going up prior to that news? That's what you want to know. Well, I don't know about you. It sure looks like it did to me. Look at that. So before that news came out, the implied volatility was going up. Isn't that amazing? Look at that. Now, the next thing you want to know is, did the implied volatility start going up like Friday? Well, yeah, it did. Look at that. From 27 to up here, like 33. So the implied volatility did go up. So, and it's been going up. Look at that. So it's been going up for a while. So just keep that in mind, that kind of stuff is interesting. So if you go to the day it started to go up, was that earnings? So that's the first thing you want to know. Was it because of earnings? Earnings were November 6th or November 7th. The implied volatility started going up right here on the 27th. See that? So the first thing I do is I want to show you on how this works. So you see the implied volatility has gone up before the stock did. That's what you're looking for. Now, just to let you know, I already had a takeover list for 2025. Believe it or not. And one of them is Hershey's. So I have a lot of these where I do these rumored takeover and stuff, and I build a list. And that was in there. But let's go back to Hershey's. I want to show you on how this works. You see the implied volatility going up. So you see that implied volatility going up. The first thing you want to know is what day was that? That was on the 27th. So I'll go to the rewind function. You know, I like doing that. And we want to see if we can get it to work. So we're going to go here. We're going to go to November. Now, just to let you know, the reason I had 2019 is I'm going to do in the essentials room right here. Just on the last day of the month, we're going to look for like bounce candidates, you know, for the stocks that have been complete dogs during the year. In fact, let me go to that just so you know, just a little advertising. I want to show you what we're talking about. We're going to take stocks that a lot of people dump at the end of the year, like Oak. That was one of the more successful. So as you see, it was down all year. Now you might be like, I thought you said you like buying them in November. That a lot of people then do the tax loss on they sell them and then they buy them in 30 days. Yeah, but there are other ones that people just want to get out at the very last minute. So they're hoping it goes up. They never want to look at that stock again. So as you see, that had a big old pop. It had a big pop the first of the year. I'll show more of those. But getting back to it, we're going to go to Hershey's and we're going to go to November 27th. Day before Thanksgiving. Did you see a lot of option activity? Let's look. Like I said, I love doing this kind of thing. So we're at November 27th. It's pre-buffering. We're going to see if there's any funky options. Now, keep in mind, you're not going to get them for that week. There's hardly ever takeovers on a holiday weekend. July 4th, Thanksgiving, you just don't get them because the lawyers don't want to do it. They don't want to mess around and ruin their weekend. This is experience for you. So we're going to go and look at these options, not that one. I usually go into January. So let's look. So none there. Now, just to let you know, with on demand, it doesn't always work perfect. So as you see, so a lot of times what I'll do is I'll take off on demand if that happens, and I'll go to the Analyze tab and just go backwards. So let's go to the 27th again. We're going to put Hershey's in here. Nope. All right, how about January 3rd? Nope. Yep. Look at that. You're starting to get them. Now, let me just tell you another thing we watch is if the implied volatility goes up, we start seeing if the open interest goes up, like a call, like accumulation of options. So look at this. Just take that. See the 1,000, 1,600. And now move this and see if it changes. There, now it's 1,500. Yeah, look at that. All these are starting to accumulate options. See that? So how do you know they're accumulating? Because the implied volatility is going up. That means a buyer, not a seller. They're at 3,000. What is that all about out of nowhere? And what do you notice? Open interest updates, just so you know, open interest updates at midnight. So what do you notice? 3,000 options on December 5th. See the open interest is 1,000 of the 180s. Look what it is the next day. 3,000. That's how you know it's a buyer. They're accumulating. Now it's 4,000. And now all of these have 1,000 open interest. Go backwards. Go back to Thanksgiving. And look at this. Hardly any have a lot of open interest. That's how you know it's a call accumulator. Look at that. Look at it go up. And now what happened today? It's up 21. So those 180 calls that were $5 are now 21. Yeah, you think somebody didn't know anything? Isn't that amazing? So they were accumulating, and then you get that. So that all has to do with that implied volatility going up. Now, would that have shown in an implied volatility rank? Well, yeah, they probably would. So unfortunately, the Thinkorswim is jamming again, as you see with the pointer. But the whole idea in there is definitely to look for that implied volatility rank. This would have gone up with implied volatility rank. So I'm just telling you, what I do is another way. So if this gets too complicated, there's another way to do it. And I'll show you what it is. Take all the stocks I showed you, every stock that we built the watch list. Like I said, I got to put up with Thinkorswim being real slow, but I'll show you on how we do it. Now, keep in mind, if you can combine it with a chart pattern, like somebody asked in Chart Patterns Mastery, you like having 3 reasons to do a trade. Does it always one of them include charts? You're going to see that if a stock has a pretty good chart pattern and it has that unusual option activity, it's more likely to work. So just keep that in mind. So let's go and show you. So we're going to take that tech thing I showed you. And we're going to take over tech stocks. Remember this? It's not that many. I'm going to build it bigger. And then look and see if that IV has gone up. So all we're doing is taking my normal thing and we're right clicking and we're putting in the bottom implied volatility. And then just go through them. No. So I'm just pressing the down arrow. Pressing the down arrow. You see most of them, the implied volatility is going down. Why? At holiday time, they usually do. It's extremely rare what Hershey's did. Extremely rare. Not bad. You see the slope. Yeah, that one's not bad. Went from 18 after earnings and started going up. So I'm just telling you, this is a really cool NTNX. Look at that. Scraping the bottom of the barrel. Not my criteria. Look at Grab. What the heck is that all about? Now, obviously, the stock's gone parabolic, but there's an increase. So really cool. So you can just go through them and you'll find them. Like I said, Hershey's, It's not a tech, obviously, but I'll put it up here just so you see it. Look at that slope after Thanksgiving. And then look at the slope of that. Which one do you think is more rumor takeover? The one that the implied volatility is going up. Look at Hershey's again. What else do you notice? Well, the stock was trying to form a bull flag. Really cool. So I thought you'd like this. I hope this makes sense. And take care. Like I said, I would build a watch list. You can even just put takeover rumor on Google and build a watch list and then monitor the implied volatility. So take care. Thanks for listening.